But yeah, let's talk about like some organizing stuff first. I think we are pretty. I think almost everybody's already here. So first of all, I'm a little bit intimidated now by new people, but I will figure it out. And thanks for joining. Thanks for trusting me, and I hope I can deliver you a great mentorship. So organizing stuff. So first of all, I said we do those first two streams as usual. So like this one and the one on Saturday. We keep the times. And also by the end of this week, some people will leave us simply because their 3 months are up and they are not so active. As you all know, if you're active, if you're valuable to this group, you can stay pretty much as long as this mentorship exists. And this is for several reasons. I just see there is a potential audio issue. Okay, good. Just wanted to be sure. So back to the topic. Some people will leave us simply because they weren't that active. And first of all, I want to cap the group at 20 people. And I mean, it's something a bit fluid because, for example, some of you are pretty much here since what, 8 months or whatever. I don't even know how long this thing is running already. But you guys are all always here. You pretty much join every session. And I mean, it's not everybody needs to join every session. I get it. We all have a life. And I also had to skip a session or two in the past. So this is not the thing, but if somebody's not showing up for weeks, I just suppose people don't need it anymore. And then we need to make space for new people. And I have to be strict with that, even though I would like to keep everybody. And to be honest, for me, it doesn't really matter if it's like 20 people, 30 or 50, but in the end, the value for each of you gets smaller the more people there are, because there will be like less attention to your problems, obviously, because we have limited time. So I have to be strict with that. And some people, even though they are with us for quite a while, they never really join, and so I have to make space for new people. It's just like that. And also, like if if people weren't active for like 3 months and now suddenly because it becomes scarce and they watch, I think some of those people probably even watch the streams and everything. They just can't make it, and that's totally fine. So no bad feelings from my side there. But as said, we need to make the space. And if people now become, because it's getting scarce and many people join, suddenly figure out it's it's something great, it's a bit too late for that, I would say. And I did that in the beginning because I also didn't know how big the demand is, and I just wanted to have some people around to build this solid group of people who work together for the same goal, because I think it's super valuable for new people to come into such a group. And all those people, so all you guys, you know who I mean, that join pretty much every stream and support me also in this case, because hello Nova, by the way, because it's also support for me, because you give me feedback, I get better with you guys. And as I said, I want to build this group. And so everybody that supported me now in this phase where there was not so much demand gets rewarded by just staying. And yeah, I think it's a win-win for everybody. And also, I did this experiment since December of not making any, like, what's the word? Not a single promotion or anything for this thing, because I wanted to see if people will come on their own. And like the past few weeks just showed me they won't. And as soon as I start to do some promotions, people come. So for me, this was an experiment to figure out how people react. And how I should structure the whole thing. Because honestly, I'm not the biggest salesperson, but in the end, I have a product here and people don't come if I don't promote it every now and then. And yeah, the demand suddenly explodes. And so, yeah, thanks again for everybody who supported me now when I didn't had this demand and when I just tried and played around with you guys. And yeah, for you it was valuable, for me it was, and so your spot is secure. Okay, let's start. I want to talk about the market real quick, because it's really just really quick because nothing really happens in the bigger picture. Then we have some topics to go over. So I have a little list here of stuff you guys ask already, and the performance reflections, we have something in the wish list. But first of all, the market, we are still within this little range here. It might be volatile percentage-wise, but in the end, structurally speaking, nothing is happening. And so for the higher time frame ideas, nothing is going on. If you scalp or whatever, you can obviously share this with us, but from a swing perspective, nothing really changed. And it still, patience is still required. We bounced from this area, which I showed in the video on Monday. I think we also talked about on Saturday about that. I'm not sure. But we swept the low, we bounced from here. So this is no surprise because usually once we sweep a structural low, people start selling, we get a bounce, people start chasing again. The usual liquidity stuff, you know what I mean. And I bought some gold, and the setup actually looks horrible if you zoom out. It's not something that like fits in the usual scheme of things, but if you read my PDF and if you understood what I said that I'm scaling into gold as soon as we pull back, for example, 20% in this case, and we did. And it was a 25% pullback, very violent. We have a big absorption wick at the lows. And yeah, the setup might look horrible, especially if I only target those highs, but it's an investment and I try to get some gold exposure here. I still play with invalidations because yeah, even the best investment should not end in a 60% drawdown, of course. And I'm simply doing that because once gold usually starts rallying, it can do that for quite a long time. So we have here 3,000 days, which is from 2001 to 2011. It's like 10 years. And this might be it. So this might be already the top. We maybe have another push left, whatever. But usually during those times, those big pullbacks, they get caught up aggressively. And if they don't, I have my clear invalidation, because then we will probably start ranging, doing something like this, and or like the big parabola sell-off, even though this is way more aggressive here. And then I don't want to hold into this drawdown. That's why I simply put my stop loss below the lows. And if this is just continuing for another few months or whatever, and performance-wise, gold has already seen a huge increase, but it could still go higher from here. And gold is also a good hedge for uncertainty. It's just diversification for the portfolio. And obviously, if it does this, and for example, we are somewhere within here, and there will be no pullback. If I always wait for discount to come, I might wait forever, right? Because even if I wait for the higher time from discount here, I think we touched it even. Yeah, in this case, we touched it. Great signal, by the way. I can't wait for this, but if gold rips higher, I want to have some exposure. And so I see this as trade idea with potential to trail it even higher as long-term investment. Yeah, and this is pretty much it. This is all I've done. Another thing about IBKR, we can also look at the IBKR chart for that, because it's an interesting one. Oh, it's up 5% already. It's going against me right now. And I have a very simple way of dealing with this, because obviously I don't want to round trip the whole thing. If we don't go low from here, I want to make at least some profits, and the position is still at 1.5 R. And so I can simply, once we break this structure, I can simply TP, move my stop loss to break even. If it then still goes lower, good. If it then goes back to my entry, I can decide to reallocate some of those profits. Once it starts really going against me, which means also taking those highs, potentially taking this trend line today, depending on where we close, then I will TP a little bit to just make some money, be able to reallocate myself back. It's pretty much reverse investing. And another thing about IBKR, this was the first thing I wanted to talk about anyway. I got an email today that they had a technical issue and all my pending orders have been removed, or like they just don't exist anymore. Which is, first of all, nice that they tell me, but it's not nice that it happens. And this makes me think, first of all, I don't trust any exchange. I think IBKR is great. it has like all the assets I want to trade. It has a nice interface and everything, but in the end, it's still an exchange, or yeah, a broker in this case. And so I don't trust it fully. And first of all, make sure your positions are still safe. Second of all, why would they do this? If they do this on purpose, why would they do that? So a very simple reason for that would be to say, okay, they know that there is big volatility around and they want to confuse people, mess with their positions, ending them in potential losses, which is good for them. I mean, you're not trading against them technically, but in the end, confusion leads to more execution, to more trades, and this leads to higher fees for them. If you want to be very, very paranoid like I am right now, but I mean, in the end, it's all about thinking about those things. It doesn't mean that this is necessarily true, because I, first of all, have no proof. And it also doesn't change my reality that much. Why? Because I need to trade somewhere, and IBKR is great for that. And I just need to manage my positions. This reality will not change. Doesn't really matter if it's a conspiracy or not. And so it's an interesting thought. And as said, I would always question everything in the markets. But obviously, yeah, manage your positions. If you already have some, maybe this is just a technical issue for me, I don't know, but I got this email today. And yeah, other than that, everything very slow. I mean, I don't hope those positions are playing out, because this means usually something bad for the economy, and as we have seen also for other things, like even whole countries. But in the end, the ideas are still all very valid. Mm, I could see gold potentially going higher. I could see it potentially going lower. The thing with gold is, it's first of all, it's a parabola, so it's not an ideal setup. I'm not allocating huge amounts of money now in the setup. It's more or less now still a trade, and it could go a bit higher from here. I mean, I don't expect like huge crazy stuff, but it could go a bit higher from here, and I want to be exposed after such a big pullback, because as said, historically speaking, it's either then the top or it's a great time to buy. And I'm just taking my chances, because I cannot know if there is more uncertainty. Gold could technically like get traction from that, but I also have like studied past bear markets, and gold also got hammered when the risk market sold off. So there is no certainty in that, but I would argue after such a big pullback, a bounce will surely occur, and then if you get a rollover, I can either get out at break even, or if I take the stop, it's a calculated risk below this low, and then we probably go way lower. And so I'm just taking my chances, and it's more or less a very high time frame momentum trade, and time will tell if I'm right or if I'm wrong. But it's the same thing like with the SPX. If you always wait for the perfect time to invest in the SPX, you might just wait forever, because, for example, if you think here the bear market is not over and you don't use this chance, 10% pullback, 5% pullback, 11% pullback, 20% pullback, then you didn't buy here, you pretty much you waited for, yeah, whatever, how long, since 2022 basically, to get your perfect entry, and it never comes really back. I mean, we could argue it came back here quite aggressive to the 0.5 exactly, by the way, if you didn't know. It did that pretty much in all prior bear markets besides the COVID crash. The 0.5 was always a good time to get in. So yeah, just saying, some assets just trend harder than others, and if you wait for the perfect pullback into your perfect level, you might get no exposure at all. Yeah, I mean, everybody should do themselves. So you do you is what I want to say. As said, it's not optimal, but I've sold my gold on the way up, and I want to gain some exposure back after such a correction. One of the worst systems. I actually had the least problems of all of my exchanges with IBKR, but it's a bit confusing. So the setup. But if you traded TradFi, before and you did that not on like prop firms, but really on your own account. And I'm not talking about new brokers, because new brokers are shit in my view, because you get access to many of those assets, but oftentimes you don't have the same amount of control and stuff. Plus, if you live in Georgia, you don't have access to most of them. And so I deal with professional exchanges, brokers in this case, also private ones, but they usually have the most horrible user interface you can imagine. So crypto has one big advantage, and this is like really the usable interface of those exchanges. And this is for TradFi. I don't know why. Maybe it's because it's still run by old people and they want to have it look like Windows 89, 98. I don't know, but IBKR is pretty much the best one I've found on a professional level. And yeah, the KYC thing for me, it was one time I did it and it was done. And I mean, yeah, paranoid. I'm less paranoid than with a crypto exchange, but I'm never trusting them fully. Yeah, sure, and you're totally right with that. So the usual premium discount approach, like according to that, I'm doing something completely strange here. But as said, if you always, because think back, if you hmm, if you thought about those pullbacks, it's all-time high, it's parabola. Oh, yeah, no, it's not the right time to buy. It's not the right time to buy. When is it then right time to buy? Because since then it did 100%, and it was not the right time to buy. So yeah, difficult one. I'm not saying you should. I did, and I did it in very, 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 very little size for now. And I especially wait to get a better R here. And I treat it more as a short-term trade simply because it's now, like I said, 10 years of pretty much going up aggressive already. Or yeah, depends on where we measure, but pretty much since here we go up. So it's 10 years. And this simply means it's not that optimal. Definitely not. But yeah, I still think commodities look good. And obviously the ones that are still in discount are better for gaining exposure. But as I said, I'm not waiting for the perfect time. I'm just taking my chances, because in the end, what's the worst thing that can happen? I take a stop loss. I calculated risk and that's it. And if I'm right, I make money. So yeah, that's just what I do. And if we pull back further, so let's imagine this idea fails, I get stopped, I pay the small stop loss, and if we then pull back to the 0.5, which would be from here 40%, which is for gold a huge correction, right? Look at this huge bear market. I mean, here we did more from the top, especially 60%, 40%. So yeah, if you do this, would be statistically speaking a normal correction for gold for a prolonged bear market, and then obviously can take some time to recover. But in the end, it's either going high from here, or if this is breaking down, I would say the chances are high that we get a bigger pullback, which is then obviously better for more exposure. Not right now. But just obviously better for more exposure. So what I do is, if I buy momentum, if I scale into momentum to not miss out more or less, I limit my risk exposure differently than if it's an optimal play, obviously. So if I take, for example, along the way, longs here, because it's the same thing. If you always wait for a pullback, you never get it. If you wait for a bigger pullback, you never get it, Until the big pullback comes and everybody's scared again. Then it's also not perfect. It's never perfect. And obviously here it's more optimal than, for example, longing this range low, which is definitely not what I want to do anyway, but you know what I mean. Yeah, and this is true. Interface and everything is horrible, especially compared to crypto. But if you think about it, for the crypto access to use leverage and all that stuff, it's actually, in my view, way too easy, because people that have no clue, they can easily open a position. And in IBKR, there are some stepping stones you need to overcome to actually have access to those things that wreck so many people. So you could argue it's also a security feature. It's also like driving a car got so easy that if it's like in a city, if you have like a 1 centimeter of snow, people suddenly lose the ability to drive, and all those things. So it's always a question of who is profiting from what. And obviously crypto exchanges are designed easy. They are designed for retail because this is what crypto was made for, right? So yeah. No, spot. It's a spot ETF. And also like the same knowledge applies. I think Travis also asked about spot exposure versus leverage exposure. In this case, I don't see a reason to buy spot gold. Like if I say spot gold, I mean physical gold in this case, simply because physical gold is a little bit slow, especially living in the mountains. And so obviously I do an ETF, but I don't see an advantage in doing it like with leverage right now. I have enough capital. If I want to be more margin efficient, I can do. Which also brings me, we can cover this because we talk about it anyway. Spotlight plays versus using leverage. And like I said, if I plan for something to be long term in my portfolio, I like to have it spot. And especially in crypto, because I can remove it from exchanges. And this is like the biggest advantage that spot really has. You don't have to be exposed to exchanges. The thing with leverage is, if you know what you do and if you read the PDFs and you know my trading style, you can also just build a position. Once it's in profit, you move your stop loss to break even or in profit, you scale up the leverage, you remove your margin, you can reuse the margin. So technically I don't increase my exposure, but still if I have a highly profitable position running and this exchange fails or rips me off or whatever, the position is still gone, even though my margin exposure is still limited. So this is a risk with leverage, and especially if you think about the bear market, if you want to, for example, buy BTC into the bear market and we get those big liquidation cascades at the end of the bear market where everybody gets wrecked and panic and fear and everything, and those exchanges, some of those exchanges fail, and you did that with leverage, you might as well just lose this position plus the margin plus your perfect entry, whatever. And on spot, you can simply avoid that. And so there is a huge advantage in doing crypto spot in this regard. And on the other side, leverage is for me a risk management tool, which means on crypto exchanges for being short, I have no option to do this spot, obviously. So to me, it's simply a tool to short, and then to if I use the leverage correctly, again, I can remove my margin, which decreases my exposure to the crypto exchange, which decreases my risk to getting rugged. And so in the end, it depends. So shorter term positions and shorts are always leverage for me in crypto. Spot-like plays always if I plan to hold a position for several months. There's also tax differences depending on where you live. And also, now regarding gold, for example, the spot gold is super slow, because if I buy gold, I go somewhere, I buy it physically, obviously some fees and whatever. And then I bring it somewhere, maybe put it into a safe, and then if I want to sell it, I have to go there again. And for example, I know from somebody who who sold his gold, I think in this area, oh no, was somewhere here. And he did that spot, and he drove to the gold store, to the gold exchange, and there was like this huge queue of people want to sell their gold and everything. So yeah, it's way slower, and you have to think about, is the current environment correct for that? Do you need efficiency, capital efficiency, going in, going out quickly, being precise or being quick with your stops and everything? Or are you planning to have more time for this position and it doesn't really matter because you hold it for months, years even? Obviously, I will always go for spot in every market then, because yeah, no hidden risk of exchanges, brokers, whatever failing, especially in gold, because gold is like this super hard money. So buying an ETF from somebody who is claiming to have this gold is pretty much against it, like on a higher time frame basis. If you just make a short-term profit, doesn't really matter. It's just gold is usually, long term speaking, gold is always something good to have. And let's just imagine something happens that never happened before. Gold goes for another 5 year of bull run. Didn't happen before, but it can happen, right? And I don't want to be the guy who's then like, oh, I could have bought it for 4K and it went to 8 or whatever. So I'm not just thinking of what makes me immediate money, but I also think like what is like the opportunity cost of not taking this risk. Because opportunity cost is actually the thing that holds most people back, because most people are rather risk averse, which is good, especially in the market. Most people, especially the ones that are still here, they're more risk averse. But what is really holding people back? It's usually not taking risks in their life, especially when they're young, especially when it's time to take those risks. It's maybe it doesn't wreck you, but it will also not like change anything in your life if you're always risk averse, and then you just have opportunity cost. You didn't try, so you never know. And in this case, as I said, it could something happen that never happened before, and just taking this one stop for this idea makes in this case sense for me. But yeah, there are definitely better opportunities out there right now, looking just at the chart. So a bigger correction looks very likely, but I have no glass ball and I try to prepare for everything, because maybe gold is the best buy right now. I cannot know. Looking at everything, I wouldn't say it's the best buy, but that's why I diversify so much, because I have those shorts and now I have this gold long. I have this IBKR short, which is rejecting from there. Let's see where the close is today. I have those longs here, still have these longs. So my portfolio is so crazy diversified that it doesn't really matter what happens. One position will always print and the other ones are usually like this one. This is no risk anymore. The only risk I have is like paying back a little more unrealized gains than expected. And if I manage it wrong, I maybe get out around break even. So there's a very, very little chance that I take a full stop on this one. Probably if I fall into a coma or whatever, it might happen. But in general, this position is safe. It's not risk anymore. And so my whole portfolio is made of those 20, 25 bigger positions right now that all counter each other. And I try to drag out some money there, put it somewhere else. And in this case, I see an opportunity, a potential opportunity in gold. It's not ideal, but it is there. And so I just take the risk. No, it's a short-term position with the potential to become a long-term play, but looking at the chart, as said, the chances are not super high that this is going to develop into a very long-term play. And here we can look at NVX. I guess it's this one. Is it? Is it this one? Mm-hmm. It's a rather crazy one, huh? I mean, yeah, technically not looking that bad, but it also, how much volume does it have? It's Australian dollar, which means, how much is this in real money? No, sorry, in dollar. 30 cents. You said last time, is it more or is it less? Just help me real quick so I don't have to search. What I want to know is how much volume this has, because the chart looks a little bit like it has not so much volume. But technically looking good. If for those plays, it's also important if it has like some fundamental reason to go up again. Just a narrative. I'm not saying like we do now like a PE analysis or whatever, but like a narrative that could pump this whole sector. I mean, it has very little market capitalization. It has 3x. It has 1 million Australian dollar in volume. which is not that much, I think. So it has actually super low volume. Yeah, dangerous play. I would handle it with care. And yeah, I mean, if the sector gains some traction, this could obviously rip super aggressive. It likes to do a sweep before the rip, as it seems. Which could be this one, but we could also sweep this. And it's so volatile that on some of those plays you almost need to consider your whole position size to stop loss. I mean, I'm not saying it goes to zero, but sometimes those charts they just don't keep on, and they don't stop going lower. Yeah, so dangerous play, definitely. Yeah, so interesting narrative in general. I have no clue about the company itself. Obviously, the company needs to have one of those things. Like if the sector is good, so the idea of graphite is solid. I know about that. But the question is, are they a major supplier? Are they somewhere connected to the whole chain? Like, are they providing anything essential? Or are they just another company in the sector for just increasing probabilities for such a play? Oh, here we go. Market rotation topic. Yeah, we can do that. But if I open this topic, it's going to be a longer one. So let's see how this is developing. If we have some time, we can do that. I think we talked about this before as well, but it's an interesting one regardless. So we can do this again. Yeah, the spreads, another thing, exactly. Depending on where you sell it. Yeah, and I mean, you need to consider that I'm doing this full time, right? So my main goal or my main job every day is to check my positions. And if you think about how many things you get done in work, if you work 8 hours a day, usually your day is packed with things you can do, and I have all those hours for myself and for my portfolio. So for me, it was overwhelming in the beginning for sure, but in the end, it's just daily business. And yeah, I have my positions pretty much all in mind. Exactly, sector-wise. That's why I like to keep these narrative-based stocks, these lists, and I add it to those topics. Because if I open 3, 4, 5 positions in the same sector, they usually tend to move in unison, and then it's just the same position pretty much. Not always, by the way. When I found, was it this one? Yeah. So while the whole quantum computing sector got wrecked, this one just kept on going higher, and it didn't really correct. So if you compare it to Rigetti, different story here. So again, no certainties, not always, but in general, it's true. Yeah, as I said, it's not that bad. So if there ever was a time to buy the stock, it should be around here. And then you have clear goals, which is obviously this supply area here, this, and this would be the real test. If you look at those pump and dump charts, then the reaccumulation, usually there will be a spike and it will come back usually around the 0.5. And then the question is it really like a solid company, or is it just a stock fundraising on steroids kind of company? And that's like the real test. But like in this case, you already are around 1,000% from this price, even more. So yeah, probably better to keep this area here in mind first, maybe even those local ones for TPs. And the funny thing with those, I'm not sure how many of my videos you guys have watched already, But you know, there is oftentimes no reason to predict how high this thing will go. In this case, it's even in price discovery. Once the trend line breaks down, once the momentum fades, in this case it did here. I mean, you don't sell the Pico top. That's why those fluctuating P&L numbers can be a little bit disappointing if your portfolio was at this point and then you start selling here. It's not the perfect top. But what else should you do? You can take profits on the way up. I did take profits around this. And I did take profits around when it broke down. So my average profit was around 50 bucks, which was good. If I would have waited for 60 for whatever reason, bad, you know? And so the momentum thing is always a good strategy. Also here, good example. No, it was Nutella here. Look, it's a similar chart pretty much. You have this potential, you are at this demand down here, super aggressive pullback, 97%. And then you suddenly start ripping again, 300%. And I bought this thing around here. It ripped 150% or something for me. And you see, the question is, which is like the supply? Is it this one? Is it this one? Is it this one? Does it go to 0.5? Does it go to this little area up here? Do I want to find out with my full position is the question. And I definitely don't, because look at this. We have the trendline breakdown here, the daily breakdown. I did a 70% TP. You can find this position in Discord. And then we retested this trend line even and see how volatile this even is. And then we just gapped down 40% in a single day in pre-market. And so those things, this is like a perfect example of what your stock could do. And then you don't really need to anticipate where the real reversal is, because you will never know if this is the real supply or this or this. All those predictors and people who think they can look at this and say, okay, this is definitely going to be the reversal without insider info, you will never know. And yeah, usually insider info is not available to the everyday trader. And so breakdown of this trend line, momentum break, 70% TP. Why not 100%? Because this could be wrong. I can show you examples where it just went higher from there, and then you don't want to be the guy who did a full TP. So I did 70%, it broke down here. I added back here, 25% in this gap, 50% here. And now I still have something of this left. I still have something of this left. If it goes back down, the rest is only break even, and this position already paid me so much that it's more than break even for sure. And so this is how I handle those plays, and this is something similar to gold, because if this is just ripping higher from here and going for the 0.5 in this case, which would be insane performance, I have some exposure, but I do not gamble. I do not gamble on this idea just because it could do that. I just take some money. This is the same thing like I've shown with IBKR. Once it's a much slower play, but the idea is pretty much the same. If it goes against me here and start forming bullish structure, why would I round trip the whole thing? Because then once we start making the structural shift and I do, for example, a 30-40% TP, even though RR-wise it's horrible, it's just making me some money. The rest is then potentially stop the break even. If not, and it goes lower, good. I still have whatever, 60-70% of the position left. And it's good for my mental game, it's good for my performance, for my wallet, with everything. So no need to predict for me. I look at the chart, I say, okay, structure is going against me. Doing a TP, it did not go to my final target, and that's it. Accepting the reality. Why is my mouse lagging now? Or is it me? Yeah, volume. Volume, very important. On those plays, I mean, yeah, you look at the Australian exchange, which makes sense. In this case, when it's listed there and you have all the history, but it's still important how much US dollar volume has it, how much Australian dollar volume has it. And yeah, it's the same as in crypto. The more volume, the less it can be manipulated by. I did not quit unexpectedly. It was me. Yeah, so as I said, look at the volume, because the less volume, the thinner the order books, the easier prices moved, and the more The less volume there is, the more your volume is important to the market maker. You know what I mean? So let's imagine, like, let's simplify this. You have one market maker which creates probably already 50% of the volume, of the daily volume. Hello Bashir, by the way. And you are, like, let's say you're just the only guy, it's just an easy example, who's trading this, and you are the rest of the volume. So let's say the market maker makes 70%, you're the rest of the volume, he's only targeting you. The less the volume is, the more likely it is that you are the target. This might not be interesting with nano size because you just don't do anything to price and volume and order books, but in general this is important because market makers, after a certain size, market makers might even target you, especially if you trade those low volume shit stocks and shit coins. Because if the book is thin, your money is important to them. And the higher the volume, the less easy, the less likely it is that it's controlled by a few entities, the less likely it is that you are going to be the target after a certain size. And all of those things matter a lot. And stocks are not different. I mean, they're still like, they're regulated. They're not Wild West crypto, but in the end, the same principles apply. Yeah, and in the end, I mean, it's something you can play. So let's have a look again. If you want to have a clear how I would trade this, it's a tough one because you can't really pull any trend lines. You can't really say when it's time to reverse. And right now it looks a little bit like it wants to completely die. And it does those, you see how difficult this is to trade because it does those like breakouts, close above, you think, oh yeah, structure is changing, and then it just comes back and goes even lower. So this is like really, really predatory price action here. And it's targeting everyone. And this is also a reason when I look at the chart and people ask me, what do you think of this chart? I look at this and I immediately see if this is going to target me or not, if it's hard to read or not, if it's giving me clarity, something reliable, or if it's just random crazy PA targeting everybody who's putting some money in. And technically you could say, okay, good. I give it a try. We have this local shift of trend, whatever this is worth on this chart. You could also wait if you want to have a little more certainty for something like this. But typically, these kind of things, once it starts doing this, it starts doing this like super quick, and then you end up chasing this more or less. So yeah, I personally would not trade it at all. But if you want to trade it, I mean, or invest in it, this is probably one of the better times to go in. And yeah, the question is, stop loss is definitely, if you want to play it high time frame below here, it's definitely almost your position size. And if you play it here locally, even then, major stop loss. But in the end, you see a 20% stop loss for a potential, if you target this, for potential 200%, it's a 20R idea. And it's again, it's often just taking your chances, opportunity cost. What is the worst thing that can happen if you risk 1% of your portfolio? The worst thing that can happen is that you lose 1% of your portfolio. The best thing that can happen is that you make with TPs maybe 5% or whatever. And so, yeah, it's all about opportunity cost. It's not a play I would take, but in the end, I always say, why not? If it's a reasonable idea, if you have a valid invalidation, if the thesis is valid overall, it could work. Or it just pukes and keeps on going lower and yeah, is heading to death or to die. I mean, there is an example for, do I still have it? For a dying chart. I don't. No, I don't. Yeah, this looks also super happy that I did take my TPs. Also very predatory one. Maybe has a comeback. Maybe does something like Loy, because sometimes they die and then they suddenly come back from the death. See this one came all the way from 3,000. Imagine being a early investor. You lose more than 100%. And then suddenly it comes back, right? So you never know. You never know. I mean, this big volume spike here was probably telling. And ever since then, it did kind of good, I would say. So yeah, opportunity cost. If you have a clear validation, if you have a clear idea and everything makes sense, you're not doing something completely out of the ordinary, if there is anything ordinary, by the way. And you have a clear validation, which is like, I can't say it often enough. If this is the case, you have a valid idea, you define your risk, and you are disciplined enough to stick to this idea. What is the worst thing that can happen? Taking a stop loss. So not that bad, actually. Yeah, I actually made a post about that. I think actually, perfect example, by the way, Liu, whatever, it's a nuclear company for nuclear energy. And yeah, as you see, ever since the green agenda is running, I don't remember when they started with the green agenda in Europe, like you need e-cars and all that crap. This chart actually recovered kind of good from there. And this might be a sign that, yeah, there's a big rotation coming into nuclear power again. And also, if you look at Oklo, for example, it's a company, how's this guy called? Like Sam Altman is involved heavily in. Why? Because he knows how much energy his AI technology needs. And this is a company that is involved in research for building those mini reactors, more or less, water-cooled mini reactors. And it's just pure speculation, as you can see on the chart. But at the right time, getting some exposure to these narratives. Also, why not? Opportunity cost. Sam Altman will have his reason to invest or to build such a company. And once it comes back to those demand areas, I will definitely be a buyer, because I think nuclear energy is one of the best energies we have, actually. Even though, sure, if a nuclear power plant blows up, it's not that great, and also the waste is a problem. But there are actually ways to reuse that waste and make it harmless, more harmless, or there are at least ideas for that. And I think it needs just some funding, and in the end it could be figured out, because it's one of the most efficient ways to make energy. And if you look at, for example, the renewable stuff, it's oftentimes not really eco-friendly. So if you take solar panels, they rip those rare materials, minerals out of the earth. In Africa, the Chinese buying all the land, building those mines are under like horrible conditions, polluting all the water and everything to build solar panels, and all the world is now buying solar panels from China. So where is the fucking green thing? So, and if you look at a power plant, the nuclear power plant, it does. Sure, as I said, the nuclear waste is not good, but the amount of energy you get for the amount of waste you produce is actually super good. And yeah, so I think it will have a big comeback. Yeah, there are also big nuclear companies. These are like more speculative ones, because this is my trading list. But there are also more investment companies. I made an ex post, I think, about nuclear energy, where I even listed some of those companies as well. Can maybe look it up in the future, man. Yeah, I trade, for example, I don't trade breaker blocks at all in stocks. For me, it's supply demand premium discount. I don't think so. Sometimes they work, but only if they align with higher time frame structure. But I think this is the case for all of them. For me, this whole thing is more or less a refinement. And even then, refinement oftentimes doesn't lead to better results for most people. So I'm not even sure if I would recommend it anywhere. But for stocks, I can definitely tell you I'm not a big fan of breaker blocks. What works phenomenal is gaps. So I also did this backtesting session on the 1 minute time frame on Tesla. And those pre-market gaps on lower time frame, they are like one of the best reactive levels I've seen so far. And maybe I have an example. Didn't really trade gaps lately. yeah, if you have those gaps, like real gaps in the chart, these are super reactive levels on stocks, on all stocks, not just indices, but every stock is super reactive on those levels. Yeah, Meta is actually one of those. Created this pre-market gap, came back, filled the whole gap. Could have played it even tighter, but it was a higher time frame short investment. And so yeah, those gaps, and I don't really care what's behind them. This thing here is supply, right? We have, could also call this a left shoulder pad. Then we created the right shoulder here if you want. But in the end, this pre-market gap, the middle of the gap is good and the closement of the gap. So if you want to trade it, just cover the whole gap, go in around the middle of this gap. And I was a bit late on this trade, by the way. But yeah, on high time frame, it doesn't really matter. But yeah, those gaps. If you want to trade anything on stocks, I would say those gaps are probably the best levels you will find. Look at this one as well. Sometimes they fail, or as always, there is no perfection in this market. But if you see a gap and if it aligns with higher time frame structure, like in this case, you see this little gap here. There's a reason why I marked this level here within this big demand, because this gap is now my refinement pretty much. And you see we even have a breaker block here, have we? Yeah. And so you see then it adds up, because if I want to buy Meta, I would do it in this region, like ideally, if we even get down there. And then this would be my perfect refined level. But this also means I would not play it like that, because it simply doesn't make any sense to me to think like, okay, I need to perfectly get in here. Whatever, I could do that for a refined position, but if I want to gain exposure to Meta, my trade will probably look like this. And then if I want to take a refined trade from this area, why not? But then also I would let PA develop, and then while this PA develops in this area, I would then take a refined trade with my stop loss below the local lows and try to get a better R trade for a refined entry. What's the context? Exactly, and this is what people ask way too less. People think there is a level, and just because there is a level, something will happen there. But first of all, context, put everything into higher time frame context. Sure, if you scalp the 1 minute, it might doesn't matter where you are on the chart really, but if you don't, and if it's a mid time frame trade and everything, it should align with the high time frame context still, if you want to have a high probability trade. And that's it. And not just, oh, there's a level, there is a level. People neglect the basics completely, like supply and demand, premium discount. People think just because there is a breaker block, it's like it's that. But if you really backtest every level, you will see that the win rate is actually pretty low. If you backtest those levels as refinement within higher time frame context, you will see the win rate increases dramatically. And for everybody that's not gaining some joy out of losing, having a higher win rate is actually a good goal, and it's a lot more fun. Yeah, I guess you need to figure out your thing. I mean, we have a lot of traffic today in the chat. Yeah, which is good for me. I like that. But obviously, you need to figure out how you do that. Usually, as you see, my structure is like I have a topic prepared. Today, I have still some things on my list, by the way. I mainly had my thing in the beginning, like how we structure this, answering the questions, which we didn't do because we have so many questions in the chat. But usually topic, then answering questions, and then diving deeper into a topic from the questions. But yeah, we have a lot of traffic today, so let's see to what we get. Because we have also the performance reflection, and we have, I think, another live stream topic wish list requests. Yeah. Oh, yeah, and the cold showers. Yeah, yeah. Yeah, and what I wanted to say originally is that I usually then talk and then I take a break, drink a little bit from my tea, and read the questions where you can also then read or ask. Definitely. Good, very good that you think about that. This is what I meant, for example, for Loy or Lou. Look at this spike here. I mean, the chart needs to be in logarithmic to really see that. But first of all, we had this huge spike, which could be considered a like changing character at least. And here, even breaking the structure. But yeah, still, like imagine the stock going down, 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 down forever. The volume spike is interesting, but at the same time, would you buy that? I'm not so sure. But I mean, we got this retest here. By the way, a long time later. So this all like is so much compressed data. It's yeah, 2 3 years, 3 years actually, until this retest came. I mean, this bounce was super aggressive, but this volume spike was definitely a sign that there is something changing. One thing is, but it's really important. If you look at this volume bar thingy down here, you need to consider that this volume down here is measured in shares, right? It's not dollar. And these volume bars, they show you shares. And so obviously, if the price is pretty much zero, or here in this case $1, there will be a lot more shares being traded compared to when the price is at 300, right? Makes perfect sense. So if there's like one share for 300, they will not move so many shares per day. Still, price is rising and volume is rising, which is showing that there is real demand, or not demand, there's real volume going on. Price is rising and volume means there's like real volume coming in. As of down here, like there is a big spike, and I mean it's a really big spike, right? I mean we talk tens of millions of shares here, but still, it's often, if you look at the chart like this, you think like, wow, there's so much volume coming into the lows, but it's because prices go down and there are just more shares being moved. So what's really important is that you look at the volume, and in this case, the average volume is like around 1 million. And then you need to exit with the dollar price to really have the dollar amount of volume. Obviously down here, if you have 10 million shares being moved in this 1 week candle and the price is at $1, or in this case at $2, $3, you know it's 30 million or whatever being moved into this move. And this is definitely a sign in this case. But you will also see charts that just go down and you see the volume increasing and think like, wow, there's accumulation. But in reality, it's just more shares being moved and not more money. I meant US, like in general, it's always somewhere, somebody's always the target. But if you imagine on a high volume asset where tens of millions of people trade, it's not very likely that you specifically get targeted. If you, for example, trade a very low volume asset, and then even on lower time frames, and you trade with leverage, let's say, for example, and sometimes if you play with tight stop losses, you will see that your size goes up like a lot, especially if you start trading with size and you then do it on lower time frames. You still have maybe just a few dollars risk, or let's say $100 risk, and your position, if your stop loss is 0.5 or whatever, your position size could be 10K, 20K or whatever. And this will pop up in the order book, especially if this asset is like on very little volume, maybe even on, if you take crypto on wash trading volume, sometimes those coins, they might say they have 10 millions in volume, but 70% of this volume is not even real. It's created by this exchange, by the market maker, just moving around those coins to make people think, oh yeah, there is something going on. But in reality, this is not real volume. It's just like keeping the circle going round and round and round. Like, what's the word? Yeah, like a roller coaster, or like a, there's this sentence which Matthew McConaughey says in The Wolf of Wall Street, like the wheel, the Ferris wheel spinning round and round and round. It just seems like there is something going on, but in reality, it's just the market maker doing that to attract people. And so once the volume is above 50 million or whatever, it gets kind of harder. Still possible, of course. And if the volume is a billion a day, you can imagine that this is not very likely that one person is doing that legally, especially on those assets, because those small assets nobody cares. But if it's a big established asset, you can't do this anymore. And the bigger the group that gets targeted, the less likely you specifically get targeted, the more the less erratic the price action will be. And obviously, if the price action is more predictable, it's also less targeting you, because if it's predictable for you, you're less target. They do in most cases, but I mean, imagine these are the richest, uh, most evilest people on the planet, let's say. Like, they have almost no moral whatsoever, because otherwise you wouldn't be a market maker, I guess. And these people, they maybe they have some alliances, maybe they have some friends, but believe me, they are in direct rivalry with each other, because if you're like this, you probably have a big ego, and so they don't all dance around the fire singing kumbayas. They are probably also like fighting each other. And if you look at order flow, for example, and lower time frame order flow, you can see that big traders target each other, because sometimes you see positions popping up like super quick, and you can assume that it's probably one big position, and this position gets pressured, then he tries to protect it, and then somebody else traps him, and then he needs to cover, and this loss of this trader is then another trader's win. And so there are so many levels and layers to this, so it's not every market maker is immediately like CZ from Binance or Trump or whatever. Sometimes it's just a trader with a few million or with a few 10 million moving some shitcoins back and forth, maybe even having an online community on social media and like trapping those people, right? And all of those things. So plus then another person comes in, has also some 10 millions in crypto floating around, sees this person targeting his social media group, or sees this person targeting like any kind of traders, and he figures out how this person thinks, and then he comes in and moves his money against him to trap him, because he understands, okay, he does this every day to trap these people. And then another fish comes in, or a bigger fish comes in and say, hey, I'm targeting this guy because he's collecting money from the plankton, and I'm collecting money from this shark, and I'm a whale, you know? And so those people, they all, it's not, as said, it's not in a straight line. They all stand next to each other and having fun together. No, they all running businesses there. And if you don't take care, you get targeted as well, even with size. And this is also, by the way, the reason why market makers or big traders, they don't touch those crappy shit coins, because they know somebody else is controlling this coin. Why would you touch that if it has only so and so much volume? Because you know, I'm not the biggest fish, so somebody else is. And so you could argue that they work together, but only because they're not stupid enough to fall for each other's traps. CME gaps, same principle as normal gaps. Targets and entries, as at their reactive levels. So it's a target of me for me, but at the same time, obviously, as I showed, I wait for a reaction there. Um, Only if the market is already super overextended, I just scale out into this. But most of the time, I wait for a confirmation, a breakdown, a change in character, whatever, to do my TP. I play almost all my plays like that. But yeah, it's like a magnet, and it's entry and target. It's just a reactive level. Yeah, for me, a refined entry is simply so I have a very wide area of interest. For example, it's a big demand area. I know I want to buy there. And so I let price come. And I can, for example, let's give a live example in best case. Let me see. Can we use PayPal for that? Yeah, I think we can. So, oh, it's doing that. I need, for the YouTube thumbnails, I need to make everything super colorful because otherwise you can't see it. So I would consider this not a super refined entry, right? But at the same time, why is it looking so weird? Ah, yeah. It's a 40% stop loss. Technically, if you go back to the range highs, it's still a super nice setup. But it's not super refined. And my idea is to gain some exposure to protect my stop loss below this, well below $30. Because we could simply sweep the psychological number here, but I also know that it's so overextended to the downside already that it makes sense to gain some exposure. So I start scaling in, right? So once we start either undercut this low, I start to try to better my average or even just get some more size once we go back for this level, depending on how majors look. But we come back down here. So this is already refining for me by trying to scale in my entry a bit lower. Best case even way lower, but I can't, like, I don't know where price will go. The next thing is that once we go sideways here, break out from this trend line, I get confirmation that the trend is changing, momentum is changing. I might as well add that my average looks like something like this. If we then start doing higher highs from here, and this could take another year or whatever, who knows, or just a few weeks, I can then say, okay, good. My idea is as long valid as I do not undercut this low, because let's say price action is doing something like this, making a higher high and stuff like that. At some point I might say, okay, good. This idea will either work out and I add some size and I move my stop loss below this low because I say it should be protected. To do that, actually it would better if it does this first. Sweeping it one time makes it better. And then I say, okay, good. Once we start making higher highs, I can then refine my entry by moving my stop loss higher. And why, instead of a 40% stop loss, I suddenly gain a 20% stop loss, which means I can double my size. I have then maybe a similar average or a little bit higher, but I have doubled my size. This is refinement for me. Refinement is not for me to look here for something and try to predict what happens before. I look at price action, wait until it develops, and once it shows me its hand by making higher highs, and for example sweeping this low first, and then I add it maybe on the sweep, and it looks still like that. And then I get my confirmation, I maybe add a bit more, my average will be here, my stop will be here. I added some size, and this is then my refinement. And this is the only thing that really makes logical sense to me, because anything else is like random. Sometimes it works, sometimes it doesn't. But once it starts doing this, the chances that price action is already showing me what is going to happen next are way higher than me trying to predict something out of this cluster, which is, yeah, from 10 years ago. And yeah, it's just my approach, and I'm doing kind of well with that. This is how I refine most of my levels. And again, if I see, for example, a gap here, or maybe even a breaker block or whatever, I mark myself this level and say, okay, good. Here's even a gap, which acts like a magnet. And then I could potentially see this as a potential target, but still I wait for price action to come here to show me its hand. If it just doesn't react, why should I add here? It's nothing special. And yeah, the market is so, you see, in the market there are so many possible outcomes that if you try to identify each and every one of them, it's it's simply becoming random, because there are so many outcomes you can't predict. Sure, PayPal might be controlled by a few entities. It might has a future that can be predicted based on that, and it also might be like written already. It has already, like, its destiny is already clear, because those people, they know exactly what they want to do with PayPal. But I don't know that, because I don't know what's going on in their heads. I can just react to what they are doing. And this is the most effective way to treat the market, because it can go up, it can go down, it can go sideways, right? And these are like facts. Everything else is speculation. And then you can speculate good, and you can increase your probabilities by doing that. And in my view, it's the best way to look at price action, what it currently does or has done, and base my predictions on that, or my actions, because it's not a prediction anymore then, instead of trying to predict everything all the time and try to refine this before. And then I say, okay, there's this level and I play it super tight, I get stopped out, it then goes higher. It doesn't really happen to me. But yeah, it's also a question of how you think. But the thing is, with all this prediction, I think people think they can predict the market. And sometimes that might be true, but it's also a very, very hard reality to think that everything can be predicted and then getting beaten up 70% of the time, because then it's always your fault. So it's not really nice for the mental game. And to be honest, I trade to be profitable, and I trade in a way that, I mean, I wouldn't call it fun, like I would call skiing fun, but in the end, it should be fun. It should be not a source of pain and suffering. And that's why I trade like I trade. Mm, I'm using the QQQ and SPI there because I'm too stupid for options and I haven't really studied them. But I don't know why, some weird KDI message. You can short single stocks. Maybe it's a size thing. Maybe you need to access permission, or maybe it's because in your country there are rules for that. Because IBKR is just a provider, and in each and every country you have certain rules. And if you are from this country, you might have access to certain instruments, or you might have not. I can tell. I don't know. Flywheel. Yes, true. Exactly. You got it. I don't want to say you waste your time or not. First of all, backtesting higher time frame breaker blocks is good, because then you will see if there's something for you or not. And I mean, the backtesting won't take you 6 months, I guess, but rather a few weeks or a few sessions, and then you will know if this is something for you. For example, was what I've seen, breaker blocks in the past cycle, for example, were not the biggest edge. And I'm not even sure if it's right now the biggest edge, because I don't use them very much. I see, for example, on ETH, we got this reaction from this 7-day. So in crypto, I still consider them, because crypto is different from its movement, from everything. So I still think it's a good edge to have those levels beforehand. But I still try to do my, for example, best case, I play it not like that. Simply because, oh, there is a breaker block, I fill this FVG, because we simply overshoot it. And again, the market has so many variables that it's random, because yeah, there is maybe a predicted path, but there are so many variables that if you think of all of them, it's again random, because you can't process all of them and you can't predict all of them. And you can only prepare. And for example, best case, you wait for this liquidation and then you enter, and then you have your stop loss below. You can also use this to enter and to then wait for confirmation and then to add size. So being flexible about this approach, being fluid and not static, not always like I do step one, I do step two, I do step three, because I think this is what the market is punishing, because the market is ever changing. It's an ever changing environment. And as soon as you get comfortable with one idea, they will change. Like as soon as you think you got the key, they will change the lock. I think even trading was saying me that when I close it. And I think this is true. And why wouldn't it? Because it's such a sophisticated market. Like the smartest player, the smartest humans on earth, like program algorithms and design this market. So why would it be static and all the same thing all the time? Plus, it's an emotional market, right? So we all know market makers target retail traders, and retail traders are emotional. And yeah, they can predict that once they push price to a certain level, that so and so much retailers are going to act on this, like panic sell, panic buy, whatever. And usually it's around psychological numbers, break of structures, all of that. So what people are looking at is like creating liquidity once they start taking action. And those liquidations that come in, they are not 100% predictable, because you never know. There might be this guy in whatever, wherever, bought ETH 2015 or 2017, whatever, and suddenly he gets panic, gets panic and starts also selling into this. Nobody can predict that. Nobody knows everything, and it's an illusion. Certainty is just an illusion in this market. And so preparing for this kind of uncertainty, which can't be predicted in an emotional market, moves will overextend. There is no perfection. If you try to play this ETH level like textbook like, so just looking at this as breaker block, trading the setup like this. On Coinbase we even closed below, by the way. You got stopped out. You think, what should I do? Should I re-enter? Should I not? You try it again based on this. You get stopped again from this wick. Not really fun, is it? And if you just wait for this first liquidation to come in, put your stop loss below the low, that's good. If you just like keep room, you maybe enter. What I like to do is, once this move comes, because I can't know where it like reverses. Could have been from here, it did it from here, right? So I try to get my foot into the door with low size, pretty much like I do with PayPal right now, no, only that PayPal gives me a lot more time than crypto. I dip my toe in, I gain some exposure, I keep my stop loss super wide, still reasonable, but wide. And then once it gives me a direction, I can then tighten my stop loss. And what I don't like, for example, here, that we didn't get the sweep, and I can't see really something I can tighten here. And this is, for example, on stocks, everything becomes a little more natural to me, to my approach, to how I think, to how I trade. And that's why I focus more on stocks. For somebody else, it might be completely different. And it's not about right or wrong, it's about what works best for you in this case. And the best way to figure out is by trying, is by trading, by backtesting, by simply managing your risk and execute. And best case, even then, once you feel comfortable with one approach, with real money and with real emotions involved, because backtesting is only brings you so far to understand if you want to trade this edge, or if you understand this edge or not. And then the real struggle for most people is then the emotional game that comes in with money, like making money, losing money, all that. You only learn it by doing it, obviously. And so yeah, do your backtesting and also share what you find with us, because for us this is also interesting. It's also super interesting to see how different people get different results with the same backtesting, which then again shows that it's not the strategy, but sometimes also people interpreting the strategy differently. And in the end, if you want to become a profitable trader, my philosophy is that you will find your own strategy based on something you took from this person, something you took from this person, maybe something you took from me, from maybe even 5 other persons, and you make your own soup in the end. Because this is then when it really starts to become natural, because this is then what makes the most sense to your brain, to your understanding of the world, to your life situation, to your time schedule. All of those things matter, right? And you only figure this out by trying. Let's think about something like that. I don't want to make too many channels, because otherwise it gets kind of confusing. So I would say we let this one come in. You can just share your findings in student discussions, and if the discussion is like extending, we can just, or you guys can just make a thread for that. Then I would not do a specific channel for now. Exactly. And to be honest, when I started trading, I did only forward testing. So for me, it was always executing. I just took amount of money which I was willing to lose it all. I never did, but I immediately started with trading and like just jumping into the cold water, just exposing myself to this kind of environment. And I just committed to the edge I figured was at the time the most useful, which was the money tower edge, the breaker block stuff. Even though at the beginning I didn't even know what a breaker block was because he didn't talk about that before. And it was all figuring out yourself kind of thing. And I just executed what I understood. Over time, he leaked more and more and more. I implemented this. I figured along the way, okay, this is first of all not the time frame I want to trade. This is not the style that I want to trade. I implemented a lot of it, like premium discount, supply and demand. All the basics are still like running in my edge, but I also implemented a lot of things I learned from other people. And then over time, also things I can't say invented because who invented anything in this market? Most of the time, we just evolve things we learn, like in almost all areas of life, and applied it to a market that made the most sense for me. And yeah, and I also did some back testing, but actually, like compared to what I hear from people, I did a lot less back testing. But I mean, I have taken in my first 7 months, I probably have taken over 100 trades already. And if you not have, if you haven't taken 100 trades by now, um, don't worry about anything. It's like learning to ride a bike and you're still in week 1 or in week 2 or whatever, depends on how many sessions of bike riding you had. But it will take hundreds of trades, and until you got them, it's all learning phase. Yeah, amazing. Make your soup and let us taste. So we have also the performance reflections. So I want to talk about this. This is a very good topic. So people always say there is a lot of liquidity below, but just because there is more blocks doesn't mean there's necessarily more liquidity. The question is, how much liquidity is building up now? Because this is going sideways, BTC ETH making those high highs, people chasing the higher percentage move coins. And if more and more people get long, liquidity is building below this low. This is what I consider liquidity. This is, in my view, also what is important. That's also why I said what I don't like about BTC is that it didn't sweep the low. Because usually if price action is like going to become bullish, we usually sweep the low or we create bearish price, like price action that looks bearish and feels bearish before we then get a move higher. But in this case, you see we didn't sweep it here as well. Context might have been different, but this is what I would consider liquidity. If there is enough liquidity building up below this wick, we might as well take it before we go, or we might just go lower. And this will all depend on crypto majors, so it doesn't really matter too much what the single coin is saying. It is in discount. There is a level you want to trade. Majors are lining up. And if you want to cut that break even or not, I can't tell you. I mean, PA is not looking super strong right now. We could argue about that because we start making high highs. But what I don't like is that this liquidity line, like this is what I would consider liquidity. I don't really care too much what this is saying because we have a big demand area and I want to be long from this demand area. But as I said, what I don't like is that we are grinding up here like this. And we usually do that once to build liquidity, to flush the liquidity on the way down. You see, we have those never taking the low kind of movements, never taking the low, swoosh, flushing them. And on the way up, it usually looks different for a bullish reversal. We get those big sweeps, we get those big liquidity grabs right before the move starts. You see, it's a reoccurring pattern. And we don't really see that right now. So that's why this market structure doesn't look super bullish to me. But if you ask somebody who trades out of the textbook, it's like, yeah, we make higher highs and higher lows. We close the daily candle above, and this is like the textbook knowledge everybody knows. But this is, in my view, the reason why it's not that great to think that way, because everybody knows. If you look at market structure and if you look at price action videos, they have hundreds of thousands of clicks. So where is the edge in that? if everybody knows about that by now. So this is how I see it. And yeah, I don't necessarily care about Stellar as coin itself, but obviously if crypto rips, it will probably rip with it. And it will all depend on BTC. And as I said, it's not looking super strong, it's not looking super weak. I think there is a case to be made to be long. But in general, my high time frame bias hasn't changed, and it won't change until we really take out those support and resistance levels here and really start doing something against this structure. Because right now, we're just retesting the support and resistance level from below. And yeah, so why would I be super bullish altcoins then? But at the same time, also looking at crypto majors, why would I be not bullish at least a little bit and try to get some longs? I never think in those ultimates like I'm super long because this and that, or I'm super bearish because this and that. For me, it's like, yeah, I'm high time from bearish, but we could bounce from here, so I have this long, so I can TP from this long. If the long gets stopped, I still have the short, so everything is all right. Even if I don't have the short, I take the long, I take a stop loss, everything is fine because it's a calculated risk defined, and I'm just taking my chances. Once again, if I don't take it, it's just opportunity cost. Yeah, that's the same. Yeah, and if you had a hedge, and exactly, a hedge is nice, but even without, like I said, there is a case to be made to be like long right now. But obviously, you can size differently if you have the hedge. Your mental game will feel differently if you have the hedge. But still, at some point, also before I took the short, I did not have a short. I still had. The funny thing is, once you start to think that way, it will become easier and easier, because when I took the short, I knew I have still some crypto exposure left, some spot exposure, and I knew if this short is going to work, good, because then I'm pretty much short from like price discovery levels, which is like buying BTC for 20K. It's like selling BTC for above 100K. It's the same thing for me. So I sized this trade real good. Also because I still had some crypto long exposure, and it was easy to enter this trade. And that's why I try to keep pushing the short, because it's nice to have it, because then I can size my longs differently and I can handle and hold them differently. And yeah, and the sooner you start thinking that way, the sooner your portfolio will blossom with all those kinds of positions that balance each other out and make it just an easier game. And yeah, here's this other message. Oversizing to Chinese New Year hype. Um, yeah, this is also something like, why do people trade ideas they don't fully understand? So if I ask 10 people, I bet 7 can't really tell why Chinese New Year is something super bullish and why we need to go long for that reason. And they just do it because somebody else says it. This is, I mean, we all rely on other people's opinions in certain areas of life, especially if we are not really good in this area. But in trading is something especially heavy to like to observe, because people are super dependent on other people's opinions. And if one idea fails, social media gets opened, the next idea needs to come in, we need to check what the other people are all thinking, and then we decide our plan based on that. It should be the other way around. You should make a plan, and then you look at other people's opinions, and you either give this idea more value or less. And if somebody like with a good track record says, okay, aligns with your idea, obviously you give this idea more confluence than if somebody else, if somebody that is always wrong is saying that. You know what I mean? So other people can be helpful in decision-making processes, but the plan should come from you. You are the trader. You want to be a trader, so make a plan and then look for other ideas to validate that. And obviously, yeah, oversizing based on that is obviously way worse. But I mean, we all learn, and it's not a shame. Hopefully, you didn't get wrecked or anything. But yeah, lesson learned, and next time better. Okay, wow. I, sorry, Rooney, but I'm not sure where the trade is. Maybe on your. Here we go. No, this is no, also not. Okay, okay, okay. Check that. Within that index. Okay, okay, okay. Now I get it. Sorry for that. And same index. So you based on we are at range lows, you take something that's within this index. Makes sense. It's like taking the US trade stock, single trade stock based on the SPX or the Nasdaq. Makes sense. As I said, we talked about this. I have no clue how the Nifty and all those stocks are behaving. So yeah, you need to figure out yourself. But nice gaps, super nice targets actually. Yeah, and we seems like we have this trendline break probably with this close. And yeah, looking good so far as I can tell. I mean, here you could wait for this shift of this trend line first because we will probably go here, reject a little bit. You can use the pullback for entry, put your stop loss below low, something like that. Not taking enough trades. Yeah, obviously, like more trading doesn't often lead like necessarily to better results, but in general, like taking tons of trades with very low risk or even paper trading is key. Obviously, as said, you need hundreds of trades, and yeah, so good reflection. Do that, share them with us. Yeah, trading gets better with more trading. Yeah, great, great. 400 trades is good. It takes a lot of time. I say that market structure is one of the most important things, to be honest. But I don't see it as static as some people or most people do. Like I said, like, oh yeah, we have a daily close above. Doesn't always mean something. It's like here, like the breakdown. Oh yeah, daily close above, even several daily closes above. The weekly was a week here in this case. So staying super fluid with everything and looking through the lens of what are people thinking of that? Are people getting made bearish? Are people made bullish with this move? What is the intention? When if you always think like a market maker, when you create price action and you have a certain goal in mind, which is like draining people's money, how would you structure this the market structure to attract these kind of buyers or sellers? And also you would, if you think that way, you would probably change your approach over time, because once you do it for too long in the same way, people will figure that out and they will start trading alongside you. So you have to change something. It's, for me, it's basic understanding of human behavior and everything that I look. This is how I see market structure. As said, those bullish channels on the way down, and we have like 3 of them, they are no coincidence. Like creating this like a double top. Why is a double top so powerful, or a 3 drive? It creates the impression of higher highs and higher lows, higher highs and higher lows. And technically, market structure is saying it's a higher high and a higher low. We take out all those highs on the daily, close above them, and still we go down 50%. And same here, we take it out, we close the daily candle above. It's just by looking at price action, what happened before. This is not even a difficult question, because I look at this and I say, what is a daily close worth looking at this or at this or at this? You see? So it's always a question of context. Where are we on the chart after a 3 years bull run? These signs are to be taken as warning signs. Down here, if we start making high highs, it's a completely different thing than up here. And so all of this goes into, yeah, it's a very fluid understanding of what creates liquidity. People always say, yeah, there's a block, this is liquidity. Bullshit. Liquidity is when people start buying and selling. And how are they made to buy and sell? What is the price action telling them? All of those things matter. And that's why I think market structure is the most important thing, but it's not how people approach it. People always want to have certainty. They always want to have easy solutions. So they take it from a textbook and then it's a high and a high low and we have the closes and all that. But it's not that easy. It's a super fluid thing and it changes all the time and it needs to be put into context. Yeah. Also, like those things working against each other, but also for a reason. Yeah, Wyckoff, also something of the first things I've looked into. There are actually super nice YouTube videos. But for example, I also never learned those models. Like you have model one, two, three, whatever, and you just apply them on a textbook base. It doesn't really matter to me if this is model whatever. It's creating liquidity. Also, like a three drive. If you expect the perfect three drive, symmetrical and everything, the brain always looks for symmetric things. Like here, you could consider this a three drive or even a double top if you change time frame, whatever. It's creating liquidity. It's probably also a Wyckoff distribution model. But as said, if you rely on textbook things that everybody knows, in my view, there is no edge in that. So being fluid about those approaches, understanding what they mean, and applying them fluidly onto the chart is my way the best, in my view, the best approach. Yeah, and also those retail patterns, like they have some kind of value if people look at it, and if people trade that, it will create liquidity. It doesn't mean you should trade it like they do. It should probably rather mean you should do the opposite. And in some cases, you can do the exact opposite. Sometimes it will do something completely else. And the more fluid, the better, in my view. So for some people, this might be. I also talk to people that say, no, I need this static approach. For me, like too much interpretation is not good. For me, it's the other way around. It's also a very personal thing that nobody can tell you but you, in my view. Yeah, great to hear that. No nonsense is my approach in life, to be honest. And if I look at the trading space, it's actually almost a bit sad what's going on. Everybody's selling secrets and everybody's super complicated in doing those riddles. Like I don't know, and it's such a nice thing if you think about it. I mean, I'm also doing social media, right? And the nicest thing you could do is to frame your posts always in a way that you're always right, and that's simply by putting it into a riddle. Because then it's all on you. Like if you don't understand it, it's your fault. And I could always, to be honest, I could always make a post where I always sound smart and where I always will be right in the end, because it leaves so much room for interpretation. So be careful with that. It's a super common selling strategy in the trading space to make it riddly and more complicated than it is, because then you don't understand it. It's all on you. You just need to have more training. And yeah, it takes time, but I some people approach me. I make a post about like time for sale, and I write about how I started exchanging money for time and really bought my time and spent this time wisely. And somebody asked me like, time for sell, yeah, this means like we are now undervalued, we should buy. Uh, what? I'm talking about time, nothing else. Relax, bro. And people, there might be some things that you like And I'm not saying that there is nothing behind the curtain going on that can be figured out, but first of all, as said, there are so many potential outcomes that oftentimes it's better to not try to predict everything if you don't have access to inside information. And second of all, I forgot the point. um, I lost it. Sorry, guys. Yeah, and black and white thinking. It's also like the human mind. It's like everything in life. Usually, if you look at nature, it's usually not that complicated. You have like sure, nature has also like complicated things, and it's also difficult to survive everything, blah, but nature is pretty much black and white. You can either do that or you can't. You die there or you don't, or you hurt yourself there or you don't. And sure, there are also some complications, but compared to the market is such a completely difficult game with so many different probabilities and outcomes and so many different players and market makers and people that created that game with a very, very high, let's say, processing power in their brain, and they built something that is so, first of all, it's very efficient and very clever, but it's also so complicated that the human mind, with looking for certainty, is just running into traps, or just running. I mean, also, like, you, for example, if you take a textbook strategy, you can just take some of those strategies. They have maybe a 30, 40, 50% win rate. You just apply them. You don't think about it. It's just a very statical approach, like, and you execute it like a machine. Then you are like a very, very mechanical thinker, and your best trading approach would be more or less a trading bot. This is like the creme de la creme. You take yourself out of this equation, and you just let this thing, or you self execute based on that pure statistics. And there are people that think that way, and for them it's pretty much black and white, right? You have either like your signal or you have it not. For me, for example, I'm a very intuitive person. Everything I do, I also in life, I just go with the flow. Sometimes I just, like, for example, should I do this or that? And I just listen to the signs, if you want to call it that way, or to my subconsciousness with all the experiences it made, then leading me into the right direction. And I also do this with trading pretty much, because after taking thousands of trades, spending thousands of hours, my subconsciousness is programmed to see it right. And people usually, when they start trading, they see it exactly wrong, because the game is made to mislead you. And so the intuition and the emotions and all that can't be trusted. After a while, or in my case, I trade a lot based on my intuition, on the things I've learned, because there are so many potential outcomes. If I try to rationalize everything, I always, I probably would end up in analysis paralysis most of the time. And so to me, this is just the most logical approach. And it depends on which kind of thinker you are. As I said, I've talked to people that tell me, I can't think that way. For me, it doesn't work that way. I have to have clear rules. I have to make it black and white a bit more. But if you're able to do this on an intuitive level, in my view, best approach. And then it's not black and white. Interesting, yeah. If you trade lower time frame, for example, and I know you do, um, it's super funny to see how in very explosive expansions, you see those patterns suddenly coming in, like a head and shoulder patterns on the 1 minute suddenly coming up. And on the 1 minute, and putting it into mid time frame context, you already know it's going to fail, and you can watch how the liquidity is forming. If you then look at order flow, you can see how people trying to trade this head and shoulder patterns, and then it even breaks down the neckline, and then you see so many shorts coming in, playing this textbook trade, like, oh yeah, the neckline breaks, and then I put my stop above the right shoulder or above the head or whatever, and then they are right for a few minutes, and whoosh, they get all squeezed. And this is then the fuel for the move higher. And yeah, so retail patterns are actually, especially on lower time frames, they're super nice to watch. On higher time frames, they often play. They sometimes just look ugly, so that you can't really like see it if you look with a textbook eye. But on lower time frames, especially on lower time frames, retail traders and their textbook parents get targeted all the time. Discretionary. So for me, this is for me to be honest. Many things I only rationalize if people ask me to, because I do the educational stuff. From my side, I often would not rationalize those things because I don't have to. For me, it's intuitive. I know by now what I should do and why I should do it. And if I start explaining it, I'm sometimes surprised myself how I can rationalize it because I don't think too much about all those things. And I think the overthinking, the analysis paralysis kind of person always tries to put everything into place, like everything must to make sense. And as said, the market is so complex and so many different layers, it's very hard to make sense of all of it. And especially once you start to think you have something figured out, suddenly it starts to do something else. And yeah, that's not a problem for me, for example, because I just adapt super quick. This is good. So look at what you. So for example, if you keep a journal also like for your day-to-day life, figure out how you think, how you approach, for example, how do you approach something you're really good at. So I don't know what you do in life. Let's say you're a biker or whatever, and you say, okay, when I'm on my bike, I'm in a flow state and I act this or that way. Or maybe it's writing for you, or it's painting, or I don't know. And you take this stage of something you're really good at, and you watch yourself how you approach those things. And you can apply a lot of what works for you there onto your trading style and find something that aligns with your personality in this regard. Because for example, if you're very systematic in riding a bike, then or in writing, then something more systematic might be the case. And the other way around, obviously. Trading for dummies, I heard of that. I'm not sure. Yeah, I'd say we are at the end anyway. I hope you can you hear me again? Yes. Okay. Yeah, we're gonna wrap it up here anyway. We're already in overtime. It was a nice one. I love to have new people, new input, new things to talk about. You guys trade. You guys can post your performance reflections, everything, questions during the week. Other than that, Saturday session 30 minutes earlier than today. Then we do a new poll. And yeah, and about the only thing I wanted to talk about, like 30 days cold shower. Do guys believe me? Do it. Just do it. If you will see in trading, it will help you so much if you have control, because nobody of us likes cold water, and if you have the willpower to stand yourself below the cold water, guys, believe me, the amount of willpower and control you gain over your thoughts, over your behavior is massive, and it has also other benefits for the body. So just do it. Don't think about it as long as you can. And yeah, other than that, enjoy your week, guys. We talk next week. Bye bye. Oh, I can't access the the red button like that. So bye, guys.